The big short investor Michael Burry dumps his stock portfolio after market crash warnings. So Michael Burry's Scion Capital Management dumped his entire stock portfolio in the second quarter as the big short hedge fund legend stepped up his warnings about a looming stock market crash, a filing showed on Monday. And here's the thing, Michael Burry might be right because things are going to catch up to what the politics of this current leader has been, right? Nothing's caught up to from all the decisions yet, but I'm guessing in probably within a year, a lot of things are going to crash hard. That's my personal feeling. So just be very careful with your money in the next year or so. So Scion sold off its long positions on 11 companies during the second quarter, including bullish bets on Google parent Alphabet, Facebook parent Meta, Bristol Myers Squibb, and Nexstar Media Group, according to the company's latest 13F filing. The holdings were cumulatively worth $165 million at the end of the first quarter. Burry's firm ended the second quarter with just one stock holding. Scion added 501,360 shares of Geo Group, a Florida-based company that invests in and operates private prisons that were worth $3.3 million. And Geo's Group stock jumped about 12% in trading Monday. Now here's the thing, I don't really like the idea of like investing into private prisons personally, but to each their own, I guess. So large hedge funds are required to disclose their holdings in publicly traded companies each quarter through 13F filings. The filings do not include information about short positions and are accurate as of the end of each quarter, meaning Scion's positions may have changed since the form was submitted at the end of June. Burry's bet against subprime mortgages was famously chronicled in the 2015 film The Big Short. He has amassed more than 1 million followers on Twitter, where he has frequently posted dire warnings about the state of the global economy in recent months. The most recent warning came last Sunday when Burry tweeted his view that the recent rally in the tech-heavy Nasdaq exchange was likely to be short-lived. Can't shake that silly pre-Enron, pre-9/11, pre-WorldCom feeling, Burry said in the now-deleted tweet. He frequently deletes his tweets shortly after they are posted. Last week, Burry cautioned of winter coming for the U.S. economy due to a surge in consumer debt that could soon hamstring spending and exacerbate a recession. Net consumer credit balances are rising at record rates as consumers choose violence rather than cut back on spending in the face of inflation. Now, not only that, you gotta keep in mind too, think about how many people are going to be defaulting on their car loans, on their car leases. Like a lot of people overpaid for brand new vehicles, like by a stupid amount. Remember this savings glut problem? No more. COVID helicopter crash taught people to spend again, and it's addictive. Winter coming. And in July, Burry argued that a brutal market sell-off that occurred at the time was maybe halfway over, with further drops to come as companies reported weaker earnings. So here's some of the comments. Oligarchs create the problems. Oligarchic benefit from the problems. Oligarchs make money. They have our government and its leaders in their front pocket. They don't wear underwear, and in that pocket is a hole. You do the math. Oligarchs get what they want. Invest in psychedelic mushrooms and food made from insects. Wow, okay. Invest in companies that make robotic dogs that shoot bullets. This is where oligarchs' money is going, what they are buying. Market up more than 10% since he dumped. He'll never catch up now. He could catch up in a day. Stay tuned. You seriously think a guy this smart and rich needs to catch up? If you stay long, you'll be eating ketchup packages you steal from McDonald's. Of course he does. He's been out of the market for the most part since 2007. His 10-year performance is 187% and the S&P 500 is 250%. He's already way behind. Going back down. He knows, no. Know when to hold them, know when to hold them, know when to fold them. He's a neurologist by training. After he predicted the housing market crisis in the first decade of this century, everyone thought he was insane, and he was correct. It's that the FBI went to see him and they were hostile despite his open cooperativeness. They found nothing wrong, probably called him names behind his back because he is smart, and his legal bill was $1 million. Between he and Jamie Dimon warning that Q1 2023 may be uncomfortable, I really believe them both. I just had this sticker shock at the grocery store yesterday that took me aback, and prices have been increasing for 2 years now. Like, the crazy thing about the grocery store now, just to use like a personal example, me getting dog food is 40% more expensive than it was a year ago. Think about that. The dog food I get is 40% more expensive than it was a year ago for the exact same amount of food. Look at your grocery bill. Think about what you were spending per week on groceries. You probably get roughly the same thing now. How much more are you spending now? Like, it's literally crazy, right? And if people are really bad at managing their money, they are going to be hurting financially to a very heavy extent. Like, you really need to get a grasp of your personal finances, because if you end up are living paycheck to paycheck and everything starts crashing and everything gets more expensive at the exact same time, this is going to get bad. Like, it's going to get really bad. Like, here's the thing. If the stock market crashes heavily, meaning retirement funds crash, right? Pensions crash. And also, everyday necessities soar in price. You're going to get a situation where you go to the grocery store or you go to the gas station and there's going to be some hostilities there trying to get either cheaper stuff or to prevent yourself from getting robbed. Like, it's going to get extremely bad in a lot of areas if that happens basically at the same time. But feel free to give your thoughts. Like, like, this is really bad though, right? It's going to be really bad in the stock market. It's going to be really bad in just everyday life. If you want to learn how to get out of debt and master your money, go to 14box.com. But yeah, this is going to get depressing.